Hey everyone, Bill Lethman here with Money Evolution. In today's video, I'm going to be talking about why you might be underestimating your retirement healthcare costs. So recently there was a publication that came out from Fidelity Investments, and in that report it stated that an average couple 65 years old today could expect to pay about $315,000 in total retirement healthcare costs over their remaining lifetime. So a couple things about that real quick. Number one, $315,000 of course is a very large number, and it really just pertains to just one aspect of our overall retirement planning budget, and really not a very fun one at that. We'd much rather be vacationing and playing golf and all the other fun things we want to do in retirement. Secondly, that $315,000 is of course just an average, which means that some people are going to be higher than that $315,000 and some people are going to be lower than that. So a couple of things that might determine whether you're above that or below that, probably number one is going to be your overall health status. So the healthier you are, the more likely you are going to be on the lower side of that, maybe under that $315,000. And if you have some health issues, you might be over that $315,000. So maybe the biggest takeaway of all of this is just to stay healthy and do your best to eat right, exercise regularly, take care of yourself, and hopefully over time keep those long-term healthcare costs down. Secondly, we talk about age 65, and so that's the age where this study refers to, but it's also the age where you're entitled to your Medicare benefits. So if you want to retire before age 65, we're going to need to do some planning for that. So in this video, I'm going to kind of dive into that a little bit and break down maybe some of the costs in a little bit more granular detail so you can understand what those costs may be as you go into Medicare 65 and over, and if you are planning to retire before age 65, what those retirement healthcare costs might be before that. But real quick though, before we get into the content of today's video, if you want to learn a little bit more about what we do with our comprehensive financial planning called Wealth Vision, we have some links down in the description below. You can check those out. We also have a retirement planning course called the Retirement Time Machine, and some free resources as well. So be sure to check out all those links right below today's video. Okay, so now let's get into some details. What I'm going to do for the purposes of today's video is I'm going to break this down into two primary categories. The first one is going to be age 65 and above. And that's what was really referenced in that Fidelity report, where they said that an average couple 65 years old today could spend about $315,000 in total retirement health care costs over their remaining lifetime. So first of all, what do we know about age 65? Well, we know that age 65 is when we become Medicare eligible. So it's going to be a very important distinction to make there as it relates to how or where we're going to actually get our health care benefits from. And one thing to note here too, of course, is that is an individual age. So if you do have a spouse and you're married, that's going to be your age 65 and your spouse's age 65. So you may reach your 65th birthday before your spouse or vice versa, and you may become Medicare eligible before they are. And that's a very important distinction to make there. Then we're going to be talking also about what happens if we retire prior to age 65. So we'll call that 64 and below. And then what we're going to do here is we're going to kind of break down the cost just to give you kind of an idea of what you could expect maybe once you go on Medicare and what that breakdown is there. And then what the breakdown in cost is going to be if you're retiring before Medicare kicks in. Okay, so let's start over here with our Medicare costs. Now, this is not going to be a full breakdown of what options to choose for Medicare or anything like this. What I'm doing here is just kind of breaking down some of the basic costs that you're maybe going to experience once you are Medicare eligible, once you go into that Medicare system. So Medicare is kind of like the alphabet soup, and if you want to learn more about that, I've got some other videos on the channel that you can reference where I get into a lot more detail and discussion about that. But kind of breakdown here, we have Medicare Part A. That's something you've obviously paid into Medicare your entire working life. Your employer has also contributed to Medicare as well on your behalf, but Medicare Part A, I hate to use the word free because again you've paid for it your entire lifetime, but in retirement you won't pay any cost for that Medicare Part A. Part B is going to be where a big chunk of that's going to come in there. That's going to be for your doctors, your co-pays, and all the things that you're going to maybe experience on a more regular basis. And there's going to be a tier to this as well, but the lowest tier for Medicare Part B for 2023 is going to be, rounding a little bit here, about $165 a month is what you can expect to pay there. Then we have Medicare Part D, which is going to be a prescription drug policy, and that's got a cost of about $31.50 for that, and so that's Part D. And then what I also would typically recommend or want most people to at least explore and look into is some type of a supplement plan. Okay, and there's a lot of different policies out there. They've made some rule changes here recently where some of the older plans may not necessarily be available, but according to the Medicare.gov, an average Medicare supplement policy for 2023 is about $155 a month. So when we add all of that up, it comes out to basically about $351 a month that we're paying for that. So $351, and if we multiply that by 12, our cost is going to be about $4,218. And again, that's just for one individual. So if you have a spouse, they're going to pay that as well, $4,218. And that's where you can kind of get to some of that. Some of those big numbers like Fidelity put out there with a $315,000 is if you just simply multiply that $4,218 by two individuals, and let's say you have 25 years in retirement, that could be right there without even any inflation factors in there, $210,000 just for those premiums, and that's not really including any ancillary out-of-pocket expenses that may not be picked up by some of these other supplement policies or your co-pays and things like that within the Medicare policies. So now real quick before I get into the cost, what happens before age 65, what I want to reference here is one of these other factors that could make our healthcare costs in retirement quite a bit higher. And that is going to be what's called IRMAA, which is the Income Related Monthly Adjustment Amount. And this is something that's going to be income based. So we can see right here in 2023, that $164.90, so I rounded up to $165, is what you're going to pay in that first tier of the Medicare premium schedule. This is for Part B. So if you're filing an individual return and your income is $97,000 or less, you're going to pay that $165. If you're filing a joint tax return, it's going to be $194,000 of income, and you'll be at that $165. Now, one thing to note about this, we talk about this in other videos, all the different tax rates and everything, but this is not your taxable income. This is going to be what's referred to as your modified adjusted gross income. So that's going to be before all of the different deductions and things come off of this, like your standard deduction or any itemized deductions and things like that. So that's that top tier. Now, very quickly, once you get above that, and even if you're above it by just $1, you're going to go up into that next tier, and it jumps from 165, let's say, to 230, then jumps up to 329. And if you're in one of the higher tax brackets, 750,000 or above, you get up to $560 a month. So it's a big, big difference between what it is at that base level and what it is at those higher income amounts. Okay, so let's continue on. Let's go back to our chart over here. And now we're going to look at what some of these healthcare costs are and what some of the options are if you retire prior to age 65 or prior to when that Medicare benefit may kick in. So a couple options that could be available to you. Number one is if you just recently retired or separated service from a company, it may be a possibility that you could have some healthcare coverage provided from your former employer. So that's something you can check into, check with the HR department, figure out exactly how that works. That's something you can compare to what we're going to talk about here in just a second, are some of the Affordable Care Act policies are going into the exchanges. You also are eligible for COBRA benefits as well. Now, COBRA can last for up to 18 months after you separate service from a job or retire. So that's something that might bridge you through to age 65, or maybe a quick, easy option while you're trying to figure out some of the other healthcare options, maybe in the exchanges or whatever that may be. And a third option might be that if you have a spouse that's still working, they may have a healthcare program or policy that they may be able to add you on to as well. So you can look at that. So a couple different options there. But for purposes of this, we're going to assume that you're retired and you don't have these other options available, or maybe your COBRA's already run out. And what does that look like if you go into the ACA or the Affordable Care Act? So as you're putting together all of these different retirement healthcare costs, a really great resource that I like to use all the time is something called the Kaiser Family Foundation Calculator. The Kaiser Family Foundation in general is just a great resource for almost anything healthcare related, looking at different policies and exchanges and what healthcare costs may be. But their calculator is really great because it gives you the ability to put your state, your zip code, your income to see if you qualify for any subsidies in there, and how many people and what their ages are of anybody that may be on the policy, and it's going to kick it back and give you a pretty good, pretty accurate estimate of what some of those costs may be going out into the exchanges. So for purpose of this, what I'm going to be referring to is going to be a national average using an ACA Silver plan. This is going to be for 2023. And it's also going to be for an individual that's 64 years old. So the younger you are, basically the cheaper the policies get. They don't get a whole lot cheaper, let's say between age 64 and let's say age 55 in that 10-year span there. But they do get a little bit cheaper there as you're younger. Get a little bit more expensive, of course, as you get older there. So for 2023, on average, national average here for an ACA Silver plan is $1,063 per month. And that, of course, doesn't include everything. There's going to be some fairly significant out-of-pocket expenses that you might incur. And the max out-of-pocket for that policy is $9,100 for the year. So again, this is a silver plan. There's two other levels. You can go up a level to a gold plan, and that's going to mean that you're going to pay a higher premium, but then that maximum out-of-pocket is going to come down. Or you could go down to a bronze plan, and that's going to mean that you'll pay less on a monthly premium basis, but then you're going to have a higher out-of-pocket expense there. So, kind of look through that, and as you get into some specific policies, you may find different things that are covered or not covered, well checks and all those things. Really get into some detail on that, but that should give you a pretty good idea of what that's going to be. So $12,756 is what that cost is going to be for one individual for a 64-year-old. So if you and your spouse are both yet not Medicare eligible and you're 64 years old, you go out there, you're talking $25,000 plus, just for the premiums on those healthcare policies. And again, that's going to mean that you might have some out-of-pocket. You probably will have some out-of-pocket expenses too, because not everything's going to be covered by those policies. So that's why I started off this video talking about why a lot of people may not fully be factoring in what their total cost is going to be for retirement health care. So the way that we do this with our retirement planning is we map this out. We do a lot of cash flow mapping. There's going to really be that divide. It's going to be right here in the middle, just like we've been talking about throughout this video. What happens at age 65? What happens before age 65, and kind of running those numbers kind of out separately there. Now, one more thing to kind of throw into the mix there, and especially if you're building any spreadsheets or you're doing some financial planning, you also want to factor in some inflation. Okay, so as you probably could guess, healthcare is one of the faster growing expenses that we have out there. It's got one of the higher rates of inflation. So according to JP Morgan, who does another really great healthcare summit, they put out a really nice report once a year with a lot of good statistics and everything. So they said that from 1982 through 2020, the healthcare inflation averaged about 4.7% per year. That's compared to 2.7%, which was the average for all inflation over that same time period. So almost twice the rate of inflation for those healthcare costs. They also say in their recommendations, I guess, that's in that report, is they recommend for individuals to use 6% going forward for what they anticipate healthcare costs to be going out into the future. So if you're putting together a spreadsheet and you may be using a certain number for inflation. Of course, I know right now here in 2023 and last year, 2022, last couple of years, we've had some very high inflation. We hope that's going to eventually kind of dissipate. We'll get back to some normal levels. But regardless of that, we should still be thinking about using a higher inflation factor for our healthcare related costs as we go into retirement there. So anyway, that kind of gives you a little bit of an idea of what to kind of forecast on. If we want to round this number up here on the Medicare side, we could say that Medicare, might be, $5,000 a year per person to maybe $6,000 a year if we want to anticipate maybe some unexpected things that may come up, some out-of-pocket expenses and things like that. And then I think all day long, I think we should be basically figuring, maybe $15,000 or so per person for any healthcare costs that we're putting into a financial plan before age 65. So those numbers, may seem high. They are high. It's just, healthcare is one of these things that those costs continue to go up, and it's, in my opinion, kind of a broken system that I hope somebody eventually fixes, and we don't have these kind of healthcare costs. But as we go into retirement, and especially as we get older, we're likely going to have a higher need for some of these healthcare services. So putting those into our financial plan, I think, is going to be very, very important for all of us. So anyway, I hope you got some great value out of today's video. Be sure, if you haven't already, hit that like and subscribe button there. Also check out the resources that I mentioned earlier. Our Wealth Vision financial plan really kind of helps put all of that together, creates a roadmap for not just this, but for basically forecasting cash flow. What are your retirement gaps going to be? Helping us plan out retirement income. We do a lot of tax planning with that as well. So if you watch some of the videos I've done on Roth conversions and things like that, we get into all of that in great detail. So there's some links there below. And also our retirement planning course called the Retirement Time Machine. It's got some great kind of more DIY, but some great resources there as well. So anyway, hope you enjoyed the video, and be sure to like it, and I'll see you back soon in our next video.